What's up, people? Here we go again, and welcome back to my channel. Today we're going to be talking about market structure and why it's important to trade market structure as a beginner trader or intermediate trader. All right, if you want to advance your trading skill and you want to advance your trading career and you want to become a profitable trader, one of the important things that you need to do is improve and work on your market structure. Okay, market structure was something that was a total game changer for me. I noticed how my analysis was really good, was better with market structure. All right, market structure made me able to understand market context and made me understand what market is doing at a particular point in time. So let's get into it, guys. Today we're going to be analyzing the chart and I'm going to teach you how to understand market structure. All right, for you to be able to understand the market structure, you need to understand that the market has three phases. It's going to go up, down, or it's going to range. So this is what uh, an uptrend looks like. If the market say it starts from this point A and it wants to go in uptrend direction, this is how it behaves. First of all, makes the swing and it goes low, and this low can be anywhere. It can be from here and it can go even further down. And so what happens is the market makes this move, thereby this becomes the new high and this becomes the new low. So now the market is going to have a pullback. This move down is pullback. So typically you need to think like the market makers or the banks. The market is all about making repeated patterns so that you as a trader or even a random person that is not a trader but just gambling is gonna see that pattern and be like, okay, I think I can place a trade here. So the market will always look for a place in the market where you can come to a place called a support, right? So that support could be at the previous high, somewhere further down the previous high, just a little bit, or even the very last low. As long as the market doesn't beat this low, the price is considered to still be trending upwards. So let's assume that the first time the price does this, it comes here and decides to make another higher high. The moment it beats this move here, surpasses this previous high, this becomes our higher low, and this becomes our higher high. So now, when price is here, price can also continue to come to this last low, which is our recent low now, and do what? Come back and beat this high, and price can keep doing over and over again till it changes direction. So when we know that price has changed direction, we'll come to that. But for now, let's just focus on the trend. So right now, this market is trending upwards. It's trending upwards because we keep making a series of higher low, because this low is higher than this low. And what? A higher high, because this high this high is higher than this high, right? It's higher than this high. And mind you, when price moves from this swing low to this new swing high, this becomes our trading range. From here to this point, we should expect the market to have a pullback then before it continues in the direction of that trend, right? So this is a typical uptrend. But let's go into the chart now and see how it moves uptrend. Well, so now this is the typical uptrend, right? So this is how we expect an uptrend to be, but we are in a market space. Market involves different buyers and sellers coming together and placing an order. So the market is not going to typically look this simple or this textbook, right? It's not going to look like a typical textbook trade. Sometimes it does though, but most times you won't find it that way. That's why you have to understand what you're doing because you're able to make decisions in the market and you are going to be liable to those decisions that you're making. So this is how the market, typical market, behave in an uptrend. In a downtrend, we expect to see the market making a series of lower highs and lower lows. So this low here is lower. This is a lower high and this is a lower low. So the market is going to pull back. And like I said, it could pull back from anywhere. It could be from here, it could be from here, it could be at the last low or last high. So for this instance, let's say market decides to go back to the previous high. So it does this and then it comes, makes some tiny fractal moves because price moves in fractals. And then it beats this next low, right? And so now we expect the price to continue moving or repeat that pattern. So this is the point where we're not expecting a trade. So as a professional trader, you trade the trend. So you're gonna expect the price to pull back because he's done it 3 times already. So we expect the price to pull back, but we do not know where it's gonna pull back from and continue in the direction of the trend. That is gonna be another topic, which is about entries. There is no one strategy for entering the market, right? And there's no one strategy for analyzing the market. It all depends on what you have trained your eyes to see, or it depends on what you can see. So let's say price moves from here and goes further down, right? It does that again, over again. And then this is a what? A downtrend. The moment price hits this previous lower high, we're now expecting that the structure is about to shift from a downtrend to an uptrend. We are not taking the trend yet. We are only expecting that the price must have shifted in structure, right? So this is a typical down. This is the behavior of a downtrend, just the behavior, right? And this is how a market ranges. A market could be going up, and all of a sudden it starts doing something like this, right? And then boom, this market at some point was ranging between just like this. If you use your trend line tool and you draw trend line, you're gonna get trend line like this. So this is what we call uh, a descending wedge in the forex. There's a chart pattern called the descending wedge. So the market, anytime you see the market ranging, I want you to know that the market is at equilibrium. And most times when every time the market ranges, just know that an explosive move is about to happen. Sometimes so explosive that you even miss your entries, and that's totally fine. So this is a ranging market, all right? This part right now is ranging. Now those are the three cycles of a market. So we have uptrend, we have ranging, this is market conditions, and we have a downtrend. But the crazy thing is that the market doesn't always behave this way in real time. The market moves in fractals. If you notice with my chart, there is the weekly, there's daily, there's 4 hours, 3 hours, 2 hours, 1 hour, up to 15 minutes. And there are even more categories of time frames. We have the 1 second, 5 seconds, Um, we have 1 hour, we have 12 months, we have 6 months, 3 months, just like that. So now the typical way that the price move is in factors, all right? So this same move right now that this is just a cycle, this is a complete cycle, uptrend, trend, a ranging market, and then a downtrend. But then let's say we see the market like this on a daily time frame, because the higher the time frame, the less noise that the market makes. So let's say, for example, you have price going in an uptrend. If you zoom down to your 4 hour time frame, and we've already said this is a daily time frame, price is gonna look like this, right? It's gonna be making these internal structures. Sometimes it will just go straight up, boom, to the next high. For the most part, this is what we expect price to do. Then the market starts ranging, and then boom, it's changed direction, shifted structure from uptrend to ranging, and now to downtrend. This is what we expect price to do, right? So this is how the market looks like in real time. It has or trades in fractals, and these fractals are called internal structure. And these major ones, look at the space in between from here to here. Look at that space. Those are called external structures. All these structures are external structures. All these large space from this part to this part, they are external structures, and all these tiny fragments of movements are called internal structure, right? So let's head on to the chart and see how a real live trend or cycle of market condition looks like. So I'm just gonna remove all my drawings, if you don't mind. So now I have a notification. Let's see. Okay, got some new followers. Good. So this is the chart, right? When looking at this chart, where do you think price is headed? Just from what I just taught you. If you say downtrend, then you are correct. So the price is making a series of lower highs and lower low. Let's assume the price started from here, the market started from here. It moves from this point high to this place. And it does this. This is a weekly time frame, by the way. Look at my chart there, weekly. So every candlestick here represent 1 week. This is 1 week, August 4th of 2025. This is July 28th of 2025. I'm sure. So between 28th of July to 4th of August, another 1 week, right? Week by week. And this is 21st of July. This is July 14th. So then the market does work. By the time the market makes this move, and but the market makes this move, this was the previous, this is now a downtrend. Market goes up, does this, and goes down, making a series of lower highs and lower low. And so now the market is here. Mind you, the market moves in wave. It moves in a series of support to a series of resistance. It moves from one zone to another, right? So the market doesn't move in a straight line, as you can see. But what I'm trying to show you is how the market moves. So now, because the market can move in support, and your support can either be horizontal or diagonal. So we have a diagonal support here, right? So because the first time the market moved and beat this last low, it beat it down. So this became a lower low, and it went back up into that area of support, and it boom, it beat this one again, and this became the new low. So now it's about to do it for the third time. So it's only natural for me to think in my head it's gonna play out like this. It's gonna click at this place and do what? Drop to this point. So this becomes our trading range. This, because this is now our new lower high, and this now is our new lower low. So the trading opportunities that we'll be looking for has to be within that range. All right. I hope you guys understand. Let's look at another scenario. Now, if we zoom down to the daily time frame, we will see that the market is more choppy. Zoom in for a bit. Now look at the market, right? This, let me take this out. This was the weekly time frame. Let's look at what's happening on the daily time frame. On the daily time frame, we see that the market made this move, and it didn't go that straight out there. This is the, you're getting the whole entire picture of the market. What you couldn't see on the weekly time frame, you're now seeing it on the daily time frame. And if you go further down to 4 hours, you see more fractals, more internal structures. That is how the market behave in real time. So you see this market making series of tiny fragments of lower lows and lower highs. Boom. Within this old move, you can see the long downtrend. You can take trades and opportunities just from this tiny fragment of moves. It depends on what your eyes can see. And then the market started making lower highs again and lower lows, lower highs and lower lows. And boom, the market beats the previous major structure low, right? Which was this, by the way. So now the market started going up again, uptrend, up, higher highs and higher lows. And boom, the market started reversing and continue in the direction of the higher time frame trend. Boom. Now we have a lower low as against our previous major structure or major higher time frame low. So these are new um low based on the weekly time frame. And this market started going up, and boom, the market started again in another downtrend. So now let's take this out. You see, this is the same chart, but this is the weekly time frame and this is the daily time frame. You see how the daily time frame presents a lot of opportunities for us to get into the market, right? So this is how market structure works. If you cannot understand within this range, you can now decide. I'm gonna take this one out. You can decide within this range to start looking for opportunities in the market. You can start looking for opportunities in the market because this shows me that based on the daily time frame, price is now on a downtrend because initially price was moving, making a series of higher highs and high lows, higher high and higher low, higher high and higher low, higher high. And this was the last structure low. And price does what? Gently and eternally breaks this last structure. So now the downtrend just begun. Hope you understand now the market cycle and uptrend and downtrend and the behavior of the market when it's ranging. All right. So see you again in my next video. Bless.